And then there's the argument of like, oh, well, all the retail's moving online, Derek. It's all going to be online. They've been saying that for over 20 years. Entrepreneurship is a magical thing that you can't make that kind of money being an employee somewhere, You have to have a pay for performance. Like the only type of, any of the guys that work with me is Travis or anybody, it's all, I want my incentives and their incentives in alignment, because you can't trust anybody to do a damn thing for you if you don't have that, If you don't have similar incentives, people behave differently. So, there's a few business models that are that way, or various sales things, or there's a few business models that you can have that pay for performance and still be in a bigger company. But with all the fucking political correct gibbers that you're supposed to jump through hoops and not really allowed to have a personality or a soul or anything, I think there's so much better opportunity in entrepreneurship and for anybody who's willing to take on those responsibilities. And you're going to have plenty of days where you're going to eat shit and you're going to hate it and you're like, this sucks, this sucks, this sucks, and you get up and go do it anyway. And then it gets a little easier and a little easier. And it might be 2 or 3 years of this sucks, pivot to a different thing, this sucks too. If you do that for, 2, 3, 4 years, an okay entrepreneur, not a great entrepreneur, but an okay entrepreneur is still going to make a few $100,000 a year, or, a couple million a year maybe. So, and the real key thing there is that an okay entrepreneur is going to end up making, considerably more money than they're spending on their lifestyle expenses, more than you need for food and rent and, any reasonable amount of travel or leisure type activity that you might care to be involved in. And then that's the key thing, what you said about investing that money is, it's what I did and what a lot of other people that, end up making a decent amount of money or a lot of money. You got to get that entrepreneurial money and then reinvest it in stocks or other global market assets or real estate, etc. And at some point in your entrepreneurial journey, early in your entrepreneurial journey, if you have a job and you're working on, a side business that, hopefully could become a primary business, at some point you make enough money from your entrepreneurial endeavor that you don't have time to show up for work anymore, That if you had a full-time job, plus a business that you were building, you don't even need to wait for your business to replace the total income from your job. So if you were making 60% of the money in your business that you were making in your job, you'd probably quit that job and double down on your business, and very quickly you'd be making, double the money in your business that you were making in your job, rather quickly, because it has your full attention now, and then you can scale that bigger and bigger. So there's a point in entrepreneurship that you don't have time. It doesn't make sense for you to show up to work anymore, and then there's another point later on in entrepreneurship that you've saved enough capital that you're living a comfortable life, not a crazy extravagant life, hopefully, yet. But you're living a comfortable life, but you're taking those, that surplus money and investing that and investing that and investing that. And it's not so many years until there's a point where you're making, similar or more money from your investments that you're making from a business. So, when people hear about entrepreneurship, they're like, I don't know how to build the next Google. But you don't have to. But you don't have to. If you were an okay entrepreneur, you'd go find a few $100,000 a year. If you lived on $10,000 a month, which most people could do well enough, then maybe you're putting away $250,000 a year, or $100,000, or $500,000, or whatever the fuck the number is. You do that for a few years, and then you have a good recession like we just had, and you invest that money and get to multiply it, and now you got $5-10 million. You do that again, and now you got 15 or 30 or 40 or 50 million. And that's the beautiful time, is then you're really an investor much more than you're an entrepreneur. And I think that's the greatest luxury that I have in my life right now is like, I don't want a penny of entrepreneurial money that's not going to be fun for me too. I don't have time to have any clients in my business that I wouldn't sincerely enjoy spending time with. I'd just rather not have the money. There's so much, the I'm very attuned to distressed investing, so I love buying shit when other people are scared and things are on sale. It's really my best niche is the thing I'm best at. So if I do nothing, if I literally did nothing for 5 or 10 years and just wait for the next recession to happen, if a recession never comes, I don't have to do anything else, But it's a really nice spot to be in, that to the extent that you're still doing entrepreneurial things, you're really doing it from your heart, and you want to be there, you want to do the thing, So I'm just kind of putting that framework in your head and in their heads. Is like, if you could think of it that way, it'll help you with the shit that you have to eat for 1 or 2 or 3 years. It'll help you to tolerate that it's not that your whole life is going to be eating shit. It's that, that's the price you'll pay of building those foundations, that to be in a situation where you just don't have time to show up to a job. It wouldn't make any sense to show up to a job. And then later, you don't have time to do entrepreneurial things that you find distasteful, that you'd have to either outsource them or omit them entirely, and you're going to focus on the things that are really from your heart, that are very fulfilling for you to be a part of, that was extremely important for my life. I wanted to build that, and I'm happy to help other people build that. 'Cause those type of friends I want to have. Who the fuck else do you want to hang out with? Am I going to hang out with a normal person out there, So those are the type of friends I want to have, and this is the best way that I could think of to. I joined a bunch of other social groups a lot. I spent a lot of fucking money joining various social groups, and they're I won't say much about them, but I didn't find a better one than I built myself. I wouldn't have gone through the trouble to go fucking filter through people to go create like the mastermind group. If I could just go pay for access, I'd be just delighted to pay $100,000 a year to go hang out with those people, rather than making the effort to go do that myself. So it's really a special group that I'm kind of fussy and particular about. That I only want certain type of people there. But I think I haven't found a better way, or haven't found anything else that I think would be more satisfying in my life. That I want to have shared experiences and shared understandings with those people of. The majority of people in that group have a good understanding about entrepreneurship, and how to build a business, how a business works, the general nuts and bolts of a business, which is extremely valuable to be able to be a good investor. What are you investing in? If you're buying stocks, you're buying a part ownership in a business, and you better understand how it works, or you're about to fuck things up. And then the real estate is it's the other key asset that you collecting rents, collecting appreciation on property. It's a natural hedge of inflation, et cetera, et cetera. That real estate, something like 90% of people that have $1 million or more net worth made at least some of that money in real estate. The average millionaire has 7 income streams that contributed to that money. And you don't want to be an average millionaire, by the way, because the average millionaire doesn't become a millionaire until, there's 2 studies on it, 62 or 63 years old. You want to wait that long? You don't have to. Good, and you don't have to. So, I think if you understood those 3 things in my head, and by the way, you guys are all in the program, so it's not a marketing talk. We were going to kick out the people that I would have done a marketing talk to, but I'm just putting some structure in your head about the way I think about these things. Is like, if you understood those 3 topics, if you could make money, providing a product or service to clients that you're helping people directly with a product or service, that's called entrepreneurship. So if you can make yourself useful to a group of people where they're getting a significant consumer surplus and delighted to interact with you and delighted to do more business with you, you're gonna make money like that. There's always gonna be some people are always gonna have a problem that if you can solve it, they're delighted to pay you for it. So if you have basic entrepreneurial skills, if you're an okay entrepreneur, you're gonna have a multiple 6-figure income. And if you take that money and invest it, if the market's going up, we make money. If the market's going down, I get more excited. We were here a year ago, and the market's fucked. Were you here on that boot camp? I know Phil was. Were you here during that a year ago during the? March. Yeah. I was there. I remember you shorting oil stocks or talking about it. Yeah. First, I was shorting consumer discretionary, and then I was just shorting this S&P in general. With leverage, like triple short ETFs that. You know, if the market goes down 1%, you made 3% profit. If the market went down 10%, you made 30% profit. You know, there was a single day that the market went down almost 13%. So, you know, that's, you have nice chunks of money coming in. So, you know, shorting the market when everybody's scared and there's that capitulation of, you know, panic selling, shorting the market, making money while that's happening, and then reinvesting, buying the stocks when nobody wants them. And we said, you know, we had a lot of laughs and silly returns since then. You know, that's my favorite thing in the whole world to do, is just wait for those opportunities. You know, but if the market's going down, you're making money. Market's going up, make money. Market's going sideways, go work on your entrepreneurial thing or collect some rents from your real estate, you know. So if you understood those three things, you understood, you know, how various real estate businesses, you know, commercial, residential, and the various permutations of that, you know, and had a good entrepreneurial foundation and understood, you know, took that knowledge of business from there and applied it over here and, you know, invested in other businesses. You don't have to be the best fucking entrepreneur in the world. And just what Scott was talking about, and Jaga and Phil, is you'll have those tools to look at. Like, you don't have to build the best company in the world to be a beneficiary of it. If you could be an okay entrepreneur and make a few $100 grand, couple million, and have that couple few million in savings, you get to invest in the best companies in the world, and you get to be, you know, make enough profit from that you know, again, you don't even have to do anything that you don't want to. You don't have to do hard entrepreneurial things, or, you know, it'd be a joke to. A girl asked me last night, I mentioned this earlier, she says, you know, what do you do? So I've been unemployed for 22 years, which is true. I quit my last job when I was 19, you know. But you get it. So I'm speaking to you, I'm also speaking to the group, but I think it's really smart. I think it's smart to make those commitments, and a person that understands those three areas of the economy, you know, pretty much any permutation of reality that could happen, you're going to find ways to make some money. You're going to provide a product and service, or you're going to rent some real estate, or you're going to, you know, invest in a stock, or, you know, short a commodity, or sell some options, or buy some futures, or, you know, look at foreign exchange. Not Forex, not a Forex trader, but look at the foreign exchange market and understand, well, what are the macro global economic things that affect the value of one currency relative to another, or, you know, cryptocurrencies, alternative currencies, like, you know, various cryptocurrencies of, not a crypto trader, but, you know, what are the fundamental things that would impact the valuation of one currency versus another, or these digital currencies versus traditional currencies. And you can make informed decisions to invest, or, you know, invest with a long-term perspective, or short these things, or whatever the hell you think is going to happen with it. But you have the intellectual tools to make an informed decision, and to look at the market and make an assessment of, given where we are right now, seems to me that it'd be very likely that this or this or this is going to happen. Okay, let me position myself, as Phil said, like, let me be standing in the right spot when we get to there. And kind of last thought about this, and I'll turn this over to the other couple new folks. But, you know, if you don't got to be right all the time. If you could be right, you know, once or twice per decade in a significant way, you're gonna make a lot of money. You're gonna make more money than you think you could make. You ain't got to be right all the time. And, you know, the couple ways you make money in stocks, really, or in global markets, and, you know, Phil said this well, is you need to be standing in the right spot at the right time. Well, you know, the two reliable ways to do that is not it's not worrying about the new trendy thing and whatever crazy volatility is going to happen in the short term. The two reliable ways to do that is, like, you know, to reliably engage in insider trading, which will reliably land you in federal prison. Okay, so that's not a method that I would recommend, you know. Or you have to have a pretty good understanding of human psychology and human nature, and being like, well, given the situation we're in, it seems that this or that's going to be popular. It's out of favor right now, but people are going to like to do that again 6 months or a year or 3 years from now. So, you know, they said, you know, I very smugly talk about this right now because the media has just made this big thing, you know, retail's dead. Retail's dead. Well, you know, I'm up 500% on most of the retailers I bought. I'm up maybe 500% on average in less than a year. So, you know, retail's dead. So, you know, it's like, to believe that you'd have to believe that human psychology doesn't hold anymore. You have to believe that evolutionary psychology doesn't work. That literally that your DNA is going to be modified. You'd have to believe literally that your DNA is going to be modified, and humans aren't going to do things that they've done for hundreds of thousands of years. Men are not going to go, hunt shit and bring back resources to the family, and women are not going to want to go pick up colorful things or demonstrate their social status of their man by their ability to go to the mall and buy some shit they don't even need with their female friends. So you have to believe that women aren't going to go gather pretty things and show off their social status, that they brought home pretty flowers and pretty resources to decorate their home, and they're not going to want the new fun thing that all of her female friends want. And then there's the argument, and I'll get off this topic in a moment. And then there's the argument of oh well, all the retail's moving online, Derek. It's all going to be online. Well, they've been saying that for over 20 years. They've been saying that since the late 90s. And Amazon in over 20 years is 5% market share in over 20 years. And they're by far the top performer, By the way, some of those retailers I bought, Nordstrom, when I bought it, was doing 33% of its sales online. They've been on the internet since 1998. And now they're doing like 51%, I think is the last number I saw. 51% of their sales are online. So they were already positioned to do that. Macy's was already one of the top 10 retailers in the country. But the media doesn't show those nuances. They just talk about whatever bullshit narrative that they're pressing at the moment. Retail's dead. Retail's dead. All these big box stores, they're all going to close. So, no. That's just one example. The recession before that, I did the same damn thing with casinos. I literally owned the buildings outside here, MGM, Las Vegas Sands, Wynn, a few other casinos you never heard of, like Pinnacle, Boyd Gaming, Isla Capri. I did the same thing with casinos. It's like they said nobody was going to casinos because they had their housing problems in the last recession. So I'm just like, well, people have been gambling for all of human history. Do you think they might do that again once they get some discretionary income again? So, So Las Vegas Sands, which if you walked outside here, if you see the Palazzo and Venetian complex, it's a company called LVS at the time, and Las Vegas Sands was their stock was about $156 thereabouts, 150 something, and I watched that stock go from that. I started buying it at $6, and when it went to 4, I doubled that position. And when it went to 2, I doubled that position again. And I enjoy telling the story, especially when I'm in Las Vegas. Like, my hair is long right now because at one time I had to make a decision to pay for a haircut or buy more LVS stock. And I've kind of kept it long as a bit of a joke with myself that I bought more stock instead of paying a fat girl to cut my hair. And then when I sold that stock later for $42, $44, $46 that I was buying for, $350 on average, I didn't feel too bad. Now, it went to $89, so I could say, I wish I held it longer. But when you get, a 12x return, I didn't feel too bad about it. Felt okay. I've been able to forgive myself for not holding it longer.
Really enjoying the program thus far. I'm honestly smacking myself in the head for not getting involved in something like this much earlier. Because, as Derek likes to say, like, the truth to financial freedom is going to come from those 3 pillars. Your business, your entrepreneurship, if you have that, or your job. Real estate is another one, and investing, which is the focus of this course. From the first assignment, right off the bat, a 10,000-word essay on my personal financial strategy for investing, where I am, an audit of where I stand financially, what strategies I should personally be exploring, an assessment of my own risk tolerance and the motivation behind that. Just really got me thinking and really kind of put a timeline to where I want to be financially, what's possible for me right now, and what kind of strategies I can explore at this stage in the game. If nothing else, I'm more driven and motivated than ever before, especially since I see so many other people in the group taking this very seriously. Some so much as creating their own programs to conduct custom analyses of markets in, let's say, a technical analysis. My motivation for starting this course now was the fact I realized I missed out on a big opportunity. I was always risk averse, always not confident in making investment decisions. I thought it more prudent to save, but after the market fluctuations happened in response to COVID-19, I know that I missed a big opportunity to put my money in securities that would have yielded high returns, and I don't want to miss any opportunities like that going forward. And now, because of Derek Moneyberg's disciplinarian, brutally raw, honest, kind of no bullshit approach to inspiring his students to take ownership of their financial futures, I'm confident that this is going to be much more front of mind for me. I'm already in a daily habit of reading financial news, evaluating different securities, in addition to my current job, and one day hope that this will help me leave that job for either a entrepreneurial venture or a full-time income as a trader. So very much grateful to Derek and his team for putting the course together. Excited to see what the future holds. Ian, signing off. Thanks, Derek.
Thanks for watching. Success is not for everybody, and it may not be for you. If you are or on your way to be a millionaire or multimillionaire, probably going to want to spend time with my clients. Probably going to want to have a personal relationship with me so we can accelerate that process, get you living up to your maximum potential, earning your maximum wage. You're going to want to click that follow button. You're going to want to click that bell and get notifications. Tune in every Friday. Tune in every Monday. You're going to love what you see. I look forward to having you as a client in the future.